So hi guys, a quick technical analysis for Arweave AR, right? So I think that the chart looks interesting, and I'll start from the weekly time frame. And as you guys can see, Arweave was in a long bear market, right? And then it had its 5 waves up, 1 2 3 4 5, and then this correction now is wave 2, right? So that this was your 1, and currently it's a drawn out wave 2. And as you can see from the weekly time frame, price has not yet changed character, because the weekly change of character is above these highs, which are currently being swept. So it's important to always start from the weekly time frame so that you can have a broader picture, so that this is a very important high that you need to see on the weekly time frame. You want a candle closure above it, right? But having the bigger picture is important, because this is your 1 and this is your 2, and currently this is probably your 3, right? Which you probably want to see something like this on the higher time frame. So from the weekly, we can clearly say that structure has not yet shifted, and probably, just probably, it can probably be something like this. This retracement is to sweep this high before continuation lower. So that's very important to have in mind. But some positive pictures that you're seeing is trend is shifting. You can clearly see that there is a momentum is shifting, because the price has broken from this trend line, and you can see this trend line was holding price for probably 5 months. You see, it was always preventing price from being bullish, but currently the momentum has shifted. So what do you want to see? Key is you want a closure of candle here, but let us just look at the daily time frame quickly. So what you can quickly see here is this is the momentum line we were having a look at. So you can even push it to that zone, and you can clearly see that when price broke it, it consolidated and broke away, and that is very important to see. Also on the lower time frame, you can see that we had 5 wave structure, 1 2 3 4 5, and currently what you are seeing, and we will see that on the lower time frame, is an ABC correction, an a B, a C, right? This is what you are seeing. So, and remember, as I have told you from the weekly time frame, this is your 1. Now you are we are getting the 2 retracement before the 3 4 and 5, right? So that is what you want to see. Another important thing I want you to confirm here is that, and that's what I always want you guys to always look at, is always have the RSI, because the RSI will always give you the picture of what is happening. For example, let me just get rid of this moving average inside here so that we get a clean one. So you can see that this breakout here was preceded by a bullish divergence where price made a lower low, but RSI made a higher high, right? And whenever you see this, your work is to always go to the lower time frame and wait for the break-even change of character, right? So like this is the daily. I'm sure if we will go to the 1 hour or the 4 hour, and you'll see that you had a very good buy here to trade this 3rd wave and the 5th wave. So just a quick look at it on the daily, you can see that we have a 5 wave structure, and currently what you're seeing is an ABC correction. So where could this ABC correction be coming to? So you just take your fib levels and that is what you want to have a look at. So quickly you can just have your zone as the golden ratio zone between the 0.5 and the 0.6, right? And we can also come to the 0.786. So it's always important to also have that in mind if they decide to dump the market further. So that these are your zones. So what you want to see here is an ABC structure, an A, a B, and a C here. And when price gets to this level, you don't just buy, you wait for the shift of market structure, where you go to your 15 minutes time frame and you wait for price to make a higher high, and then you buy on this retracement. This is your optimal level to enter so that you trade higher. This is always the best because it will give you a better risk to return. So like this is your daily structure. Let us quickly look at the 4-hour and you'll see what I meant. So from the 4-hour time frame, what you can quickly see is that fifth wave that we were looking at. So this is your 1, your 2, your 3, your 4, and then your 5. And currently price is retracing to these golden ratios. And when you look at this golden ratio, it's always also very important to try to marry the ratio with another point of interest. For example, this ratio, you can clearly see here that we have fair value gaps, and also you have this order block. These 3 or 4 downward closing candles, these bearish candles together is what you call an order block. So you can clearly see that that is a very important zone. This is actually the zone that you're supposed to be looking at, right? So if you're bullish and you want to, and when the market is trending bullish, you don't need to short. You can just be patient and you wait for these levels to get hit, and you can look for buys here, right? So between, I think anything from the $6 range is where you need to start being keen on it, to these levels here. But remember, like I've told you, you will have to wait for a shift in market structure like this one here. Let me just show you here quickly. When you look at this price here, you can clearly see that when we had that bullish divergence I was telling you about, your job was very simple. You could have just waited for the 4-hour, waited for price to shift here. You can clearly see that they swept liquidity here quickly. So, and you see that that price shifted with a very big fair value gap here. And also you can clearly see that this fifth wave, these 5 waves here are what you call a leading diagonal, right? So this was your leading diagonal. So that you have a 1, 2, 3, 4, 5 and ABC here, right? And the ABC, always the first wave does retrace to the lower level, yeah, between the 0.618 and 0.786. These are always your first wave retracement zones, and you can see that is what happened, right? And you could have entered on this retracement here, right? Because you know price has shifted. You enter between those levels and you put your stop loss down here, right? And that is the same thing that you're waiting here now. You want price to come to this level. You want price to come to this level. It taps, it gives a fake, then it comes and takes out the early buyers. Then when it shifts here, this retracement is where you want to buy. Your stop loss, you can just put it below this level, right? And you target first take profit is this high, because again price can come, sweep it, and then come down, because you don't know whether it's a major ABC where you have an A, a B, and then a C down. That's why it's always important to take profits at those key zones, right? That's what I want you guys to see. So I think that this chart looks excellent, because I've showed you from the high time frame. It has broken down from a downward momentum line, which was bearish momentum, but now it has shifted to bullish. It has done its 5 waves up for wave 1. It's currently retracing for a wave 2 retracement before the more impulsive wave 3. And you remember that it's always good to trade the wave 3s, right? And you can see on the daily, this was your break of structure here, right? Let me just show you clearly so that you can see it. And sometimes when you cannot clearly ascertain where the break of structure is, you can always come to this line tool. It will always show you. So you can see that this level, this low was broken by this high, right? So it's always nice. So this is this one here, and you can see even from this low and this one, these are what you call internal structures, break of structure. So that if this is the daily, if you go to the 4-hour, you'll see that the zone is different from the daily, right? You can clearly see that this is the break of structure for the 4-hour, because this high led to the sweep of this low. See, this was your break of structure here, price came and you could have bought here on this retracement now, because we have said this was your 1, your 2, your 3, ABC 4, and then your clean 5, right? You can see on the line tool is clearer than this when you have these candles here. So that's just a quick update, and I think you can just set your be patient. You don't have to buy it. Sometimes you can see that price will go up, but remember that the ABC, we can have an ABC which is clear A, B, and C, right? Where, let me just use the real tool quickly, because I know this will be important to some of you. So in an ABC, you can have an A, B, and a C, right? Where this B does not take the beginning of A. But sometimes you can have an ABC, which is like that, right? Where an A, B, C, and this is swept by the B. So whenever we have this type of correction, when this B takes out this high here, most people think that the price is bullish, but this is just a sweep of liquidity before this leg down. So that's what I anticipate here, because you want to have a clean ABC, and you can trace this, or you can track this using the 4-hour, right? Because you can see the 4-hour is clean. So you've had your A here, your B, and your C. And also remember that it can be a complex correction, so that you have your A, your B, and your C. That is your first A. Then you get now your B, which will be something like an A, B, a C. So that, let me just use a different color. That's your B, and then you get your final C, which could be something like now your A, your B, and your C to these levels that we were highlighting here. So this is what you could see. And that's why I'm saying you can just be patient and wait for price to tap these levels. And you can also clearly see that we have liquidity levels here. All this here is liquidity to this zone, right? So you can say that this is your inducement which swept this. So price will probably come to test this demand zone here, right? And but you can also have your you can check the fib tools also in this 4-hour time frame. You can have a look at the fib. Let me just show you quickly. You can draw it from your low to the high here, right? So, and we have always said that this is your levels. So you can just have your first alarm when price gets to probably around this 640. When price sweeps this liquidity here, you want to see. Why is that important? Because these levels are around the 0.5, the $6.16 level. Because we have a very good order block here also. Let me just highlight it for you. This one here is a price can also dump from here, can also impulse from this order block here, right? Because you can see that these are two equal lows which can act as liquidity. So the price can do something like, it can come, sweep these lows, sweep these two equal lows here, and then tap into this order block, then wait for a low time frame sweep and the change of character. Then this is where you want to enter. and then you can target your first here and the second. The most important thing always to remember is why I'm telling you to have your entries on the low time frame is when you enter that trade around this zone here. You see, when you put your stop loss just below this zone, you have a better risk to reward, because if price does go and sweeps this high, you can see that already that is a 7-hour trade. If you are risking $50 here, then when price gets to this zone already, you'll probably be having $350. And you can see that is better as opposed to waiting it on the daily, where probably you'll not have a better, probably you'll have to put your stop loss below these lows here, right? And target these highs. You can see now your risk to reward has gone from 7 to 2.38. So I think that is very important to note. So I think just have this, just put your eyes on this trade. And also a very important, another important thing, I think I've just seen it now. Let me just quickly have a look at it. Yeah, you can see here that what price is also could be doing is it could be also be printing a head and shoulder pattern, so that is your trend line, right? And what we are anticipating is price to correct to these levels, you see. So this could be your left shoulder, your head, and then your right shoulder, right? And what you can do with that is your targets could be around, if price was to break from this zone, I think you could be around $15, which also aligns with this bearish order block, the last bullish candle before the leg down. So I think that is your target. And you can see this level here. Also, it should align with your fib target, because all these will always align. It's funny how trading works. So if I was to take the fib levels, I take from this high to this low, right? So you can clearly see that this level aligns with the 2.272 and 2.414. This is where you expect price to go in the next leg up. So this is your 1, this is your 2. So you expect your 3 to be something like this, then a corrective structure to probably around this high here. This consolidation will hold price before the final 5th, right? And remember, on the higher time frame, this could also be a wave 1, then a wave 2 dump before a continuation of wave 3, but we will have a look at when we get there. For now, just have a look at this low time frame correction, and you can enter and target between the $14 to the $15. That should be your target when you enter, between the $6 range and the probably we have seen that it is the $5.8 range, and you can take your profit here, and you can see that is a very good trade, the risk to reward ratio. So thanks guys, and kindly subscribe, because I want to start churning out these low time frame trades which you can ride, so that you grow your accounts. Thanks, subscribe, and if you have any comments, views, or suggestions, kindly put them below the comment section. Thanks guys, bye.